Are we witnessing a significant shift in the Texas real estate market that could impact you?
Today, we've gathered insights from industry experts like Nick Gerli and Adam Taggart to share transformative information.
And the best part? You'll receive all essential takeaways in just a few minutes.
Absolutely. Discover why Blackstone is offloading its assets and what this means for your investments.
Welcome to Financial Insights in Minutes, where we summarize today's critical real estate videos.
Stay tuned as we delve into Adam Taggart's perspectives on the economy's trajectory.
Anchors away, a pressing question on everyone's mind. Why is Blackstone dumping properties in Florida?
Let's cut to the chase. Nick Gerli reveals that Blackstone is unloading homes at a loss, indicating deeper issues in the housing market.
What could this imply for home prices and eager investors? Let's dive in. So what's the core takeaway from Nick's insights? Why is Blackstone divesting?
The main thesis is clear. Blackstone's forced sales at significant losses suggest they foresee further declines in home values, especially as rental rates decline and inventory increases.
Let's analyze the numbers. Blackstone purchased a property for $365,000, but is now selling it for $350,000. Ouch!
That's a loss of $115,000. And their inability to rent it out at the original asking price raises red flags about market stability.
Rental challenges. They started at $2,700, lowered it to $2,100, yet the vacancy remained.
Exactly. This struggle to attract tenants highlights the growing pressures on the rental market, which is a significant concern for future valuations.
Now, what about predictions? Nick suggests home values could drop by 30 to 50% in portions of Florida. That sounds alarming.
Indeed, the combination of high inventory and low rental demand signifies potential turmoil in the housing sector.
With all this in mind, what's the overarching economic context?
A declining labor market could diminish buyer affordability, leading to increased sell-offs and further market instability.
Now for some future insights. What should we expect moving ahead?
Nick forecasts significant corrections in property values across Florida, creating opportunities for savvy buyers to secure advantageous deals.
And how will interest rates complicate this landscape?
Rising rates could further squeeze investors' profitability, especially as firms struggle with refinancing substantial debts at elevated costs.
What's the final wrap-up on all of this?
Strategic shifts are on the horizon. Buyers should tread cautiously, equipped with knowledge of the evolving landscape of property values.
But hang tight. Up next, we dive into insights from Mitch Wexler on Disney's recent mass layoffs and consumer trends.
You won't want to miss it. There's more unfolding that could shake up the market.
Anchors away as we navigate through the stormy seas of Disney layoffs and skyrocketing consumer debt.
Let's get straight to the facts. Mitch Wexler uncovers alarming trends of layoffs coinciding with rising debt levels.
What then is fueling these layoffs at Disney? Is it simply the streaming wars? What's the central message from Mitch's insights? Are we witnessing the downfall of home financing?
Absolutely. Mitch argues that these layoffs are not isolated incidents, but rather part of a broader economic collapse driven by excessive consumer debt.
First, Disney just cut 300 jobs. What's the context here?
These layoffs are part of a concerning trend. Paramount's cuts are equally significant, illustrating a downturn in traditional media.
What's the debt situation for the average individual?
It's alarming. Each taxpayer is liable for over $1 million in federal debt, alongside hidden local debts.
What's this wage price spiral all about?
Simply put, if wages rise excessively, prices will follow, disrupting economic order. Powell considers it a significant concern.
Interesting shift. How are shifting consumer behaviors affecting media firms?
It's leading to diminished ad revenues for traditional media as audiences migrate to streaming platforms.
What does Mitch envisage for the media landscape?
Further layoffs seem inevitable as firms attempt to balance their books in this transforming environment.
What's the outlook for everyday citizens grappling with these debt levels?
Families may be forced to navigate tighter budgets amid economic uncertainty, increasing the risk of recession.
What are the major insights from this discussion?
Mitch emphasizes the vital need to tackle growing debt and the media company's role in addressing these challenges.
But hold on to your hats. Up next, we explore insights from Adam Taggart on the U.S. economy just got way worse.
You won't want to miss what Adam has to say about our economic future.
Anchors away as we dive into today's economic storm. Is the U.S. economy truly unraveling?
Let's cut to the facts. Adam Taggart alerts us to numerous red flags hinting at impending economic distress.
Indeed. What's really on the horizon that has Adam so worried? So what's the crux of Adam's warning? How dire is the situation?
Adam's essential thesis suggests that the Fed's recent cuts may stimulate select markets, yet will not ease the underlying economic pain and market distortions.
Let's get straight to it. What do these rate cuts signify for the economy?
Adam believes significant cuts typically signal that the Fed is concerned about deeper issues brewing beneath the surface.
What's the current consumer sentiment?
Consumers are feeling the strain, with many reducing discretionary spending, particularly eating out. That's a key economic health indicator.
How's the housing market holding up? Is it still flourishing?
Contrary to hopes, Adam contends that the housing market may be overvalued, anticipating an adjustment.
Looking ahead, what's Adam's perspective for the coming year?
There's a strong chance that 2025 might bear challenges, with a potential rise in unemployment and more layoffs.
What about the stock market? Are we heading for a correction?
Yes, numerous experts, Adam included, foresee a probable correction due to unsustainable valuations.
To wrap it up, what should viewers take from Adam's insights?
It's crucial for consumers to remain vigilant and informed. Significant challenges loom ahead, and preparedness is key.
But hold on to your hats. Up next, we explore insights from Ken McElroy on your personal finances will suck until you master this formula.
Trust me, you won't want to miss what Ken McElroy has to reveal.
Anchors away as we dive into mastering your personal finances.
Let's get straight to the facts. Ken McElroy shares a formula that every household and business needs to master.
Exactly. It's all about juggling income, expenses, debt, and that magical cash flow. So, what's at the core of this financial formula?
The core thesis is simple. To achieve financial success, mastering income, expenses, debt, and cash flow is crucial. It's like having your financial GPS.
Let's break down the key points, starting with income. Why is it so crucial?
Income is king. Ken stresses that every household and business should strive to maximize income through wages, side gigs, or investment returns.
What about expenses? How do they play a role?
Expenses are necessary and somewhat fixed, but they shouldn't be your main focus. The goal is to minimize them after maximizing income.
What's Ken's take on debt?
Debt can help or hurt cash flow. Manage debt costs wisely and always seek a balance that allows for positive cash flow.
Let's discuss the golden ticket, cash flow.
Absolutely. Cash flow is the lifeblood of any financial strategy. The objective is to have money coming in while you sleep.
Looking ahead, what's the projection regarding debt?
Ken anticipates a focus on maintaining manageable debt levels while prioritizing income growth to pave the path for wealth creation.
How will lifestyle be affected by all this?
As cash flow improves, debt management could lead to greater financial freedom, enabling people to embrace life more fully.
To wrap up, what should viewers remember?
The takeaway is clear. Focus on income first, manage expenses wisely, and handle debt carefully to build a stable financial future.
But hold on to your hats. Up next, we explore insights from Henry Washington on 2 real estate markets that prove cash flow is alive in 2024.
You definitely want to stay tuned. Henry has some game-changing insights you won't want to miss.
Anchors away on today's financial voyage. Are cash flow opportunities still viable in 2024?
Let's dive into the facts. Henry Washington joins us to unveil profitable real estate markets and actual deals.
Buckle up as we dive into metrics that could direct you toward lucrative investments. So, what's the main takeaway from today's discussion?
The core message is straightforward. While many claim cash flow is a myth in today's market, Henry suggests that with astute analysis, great deals are indeed out there.
Let's identify key metrics investors should prioritize.
Indeed, net cash flow means taking rent and subtracting all expenses, including maintenance, vacancies, and property management.
Which markets are trending for optimal cash flow?
Henry pointed out markets such as Pittsburgh and Augusta, where better rental price ratios and cash flow prospects exist.
Now for the exciting part, real deals. What did you uncover in these markets?
In Pittsburgh, a home listed for $175,000 could yield a 5% return immediately, an impressive investment.
Why should investors emphasize conservative underwriting?
Because this guarantees that even if the market downturn occurs, your investment can still perform well.
What key trade-offs should buyers be aware of?
Investing in these markets may yield great returns, but it comes with the responsibility of managing properties remotely.
Looking ahead, what predictions do you have for cash flow opportunities?
Emerging markets will likely continue to provide cash flow as their economies expand, especially for adaptable investors.
What challenges could rising interest rates pose for these investments?
While they may pressure cash flow, navigating these conditions is critical for savvy investors.
To sum up, what's the crucial takeaway for aspiring investors?
Navigating today's market requires strategic investment choices and thorough analysis to uncover lucrative cash flow opportunities.
And for those hungry for more knowledge, how can they engage with BiggerPockets?
Subscribing to the BiggerPockets community gives you access to tools and insights crucial for navigating real estate investments.
Ultimately, how should viewers feel about cash flow investing?
With a proactive approach, investing for cash flow can be successful and viable, even in today's dynamic market.
If you find these insights valuable, don't forget to like and subscribe for more expert advice.
Your support helps us continue to provide valuable content, so stay tuned for more.
We've explored some insightful perspectives from our guests today on the evolving Texas housing market.
Absolutely. Nick Gerli raised the alarm about Blackstone's selling strategies, suggesting major instability.
On the flip side, Ken McElroy encouraged viewers to focus on mastering their personal finances, which is vital.
And Adam Taggart painted a dire picture of the U.S. economy's future, echoing concerns we can't ignore.
It's clear there's a mix of caution and actionable advice here. Now, for our viewers,
if you found this discussion valuable, like and subscribe to our channel. We'll keep delivering insights that could help you navigate these challenges.
and don't forget to check out our other videos for more financial tips and updates. Thanks for watching.